Ever wondered why understanding a company's financial situation is crucial, especially for investors? Well, it's like having a map when you're navigating a complex city. This financial map gives you a clearer understanding of a company's present condition, its past performance and potential future trajectory. It allows you to make informed decisions, whether you're contemplating an investment or monitoring an existing one. And it's not just about the numbers, it's about understanding the story those numbers tell about a company's health, growth, and strategy. Now, let's dive into the financial world of the Procter and Gamble Company, a global provider of branded consumer packaged goods. Procter and Gamble, a name synonymous with consumer packaged goods, has a rich history dating back to 1837. The company was born out of a simple partnership between two men, William Procter and James Gamble, who were brought together by their marriage to two sisters. Little did they know, their humble candle and soap-making business would evolve into a multinational corporation over the next century and a half. The company's growth was fueled by a commitment to quality and innovation. In the late 19th century, Procter and Gamble introduced Ivory soap, a product that was so pure it could float. This was just the first of many innovative products that would solidify Procter and Gamble's reputation as a trusted brand. As the company grew, it diversified its portfolio, expanding into new sectors and product lines. Today, Procter and Gamble operates through 5 distinct segments: beauty, which offers hair care and personal care products; grooming, providing shaving products and appliances; healthcare, offering oral care and personal healthcare products; fabric and home care, providing laundry and household cleaning products; and baby, feminine and family care, offering baby and adult care products, as well as paper products. This diverse portfolio has allowed Procter and Gamble to reach consumers across the globe. Whether in a supermarket in Ohio or a specialty store in Tokyo, you're likely to find a Procter and Gamble product. This global reach is a testament to the company's ability to understand and cater to the needs of a diverse consumer base. From Cincinnati, Ohio, Procter and Gamble has spread its wings across the globe, becoming a household name. Its story is a testament to the power of innovation, diversification, and a commitment to quality. As we delve deeper into the financial situation of Procter and Gamble, we'll see how these core principles continue to drive the company's success. Now let's delve into the current financial landscape of Procter and Gamble. This global provider of branded consumer packaged goods has a market cap of $352.7 billion and an enterprise value of $378.030 billion. This essentially means that the value of the company, when you consider both its outstanding shares and its debt, is significantly high. It's a testament to the trust investors place in this company. Procter & Gamble has 2.36 billion shares outstanding. This shows the number of shares currently held by all its shareholders, including share blocks held by institutional investors and restricted shares. Over the past year, this number has decreased by 5.84%, possibly indicating a buyback of shares by the company. Now, let's talk about some ratios. The price-to-earnings ratio, or PE ratio, is a simple way to assess whether a stock is over or underpriced. Procter & Gamble's trailing PE ratio is 24.34, and the forward PE ratio is 22.26. This tells us that investors are willing to pay a relatively high price for each dollar of earnings. The company's EV to EBITDA ratio, which is a measure of a company's overall financial performance and is used for valuation analysis, stands at 16.67. This is relatively high and could suggest that the company is overvalued. However, it's not all about ratios. The debt-to-equity ratio of the company is at 0.75. This means that the company is using a mix of shareholders' equity and debt to finance its assets. It's a fairly balanced ratio, suggesting a moderate level of financial risk. The company's return on equity, ROE, is 32.9%, and return on invested capital, ROIC, is 18.06%. These are impressive numbers, indicating that Procter & Gamble is effectively generating profit from its investments. These numbers paint a vivid picture of Procter & Gamble's financial health and stability. They show a company that, despite operating in a competitive market, has managed to maintain strong financial performance and deliver value to its shareholders. Cash flow and balance sheet analysis, 2 vital tools for understanding a company's financial soundness. Now let's dive into the cash flow and balance sheet of Procter & Gamble. These two aspects of financial analysis can give us a clear picture of the company's financial health and performance over time. Starting with the cash flow, let's consider the operating cash flow, which is the cash generated from the company's regular business operations. In Procter and Gamble's case, the operating cash flow was a hefty $17,680 million. This is a positive sign as it indicates the company's core business operations are profitable. Next, we have capital expenditures, the money spent on acquiring or maintaining fixed assets such as property and equipment. Procter and Gamble reported a capital expenditure of -$3,100 million. It's important to note that capital expenditures are a necessary investment for the company's future growth and sustainability. Let's move on to free cash flow, which is the cash a company has left over after paying its expenses and investing in its future. Procter and Gamble's free cash flow was $14,590 million, demonstrating its ability to generate sufficient cash to support its operations and investments. Now let's turn our attention to the balance sheet, specifically the company's debt situation. Procter and Gamble has a total debt of $35,880 million. While this might seem like a large figure, it's crucial to consider it relative to the company's size and its ability to service this debt. In this case, Procter and Gamble's substantial operating cash flow and free cash flow indicate its capability to manage this debt effectively. Furthermore, the company has a debt-equity ratio of 0.75, suggesting a balanced approach to financing its operations and growth with a mix of debt and equity. The cash flow and balance sheet analysis provides insights into Procter and Gamble's liquidity and financial flexibility. These insights are key to understanding the company's financial soundness, which is crucial for investors and stakeholders alike. A SWOT analysis can give us a broader perspective of Procter and Gamble's position in the market. Diving into the strengths of Procter and Gamble, it's clear that the company's diverse and strong brand portfolio is a major asset. With 5 operational segments spanning beauty, grooming, healthcare, fabric and home care, and baby, feminine and family care, Procter and Gamble has a firm foothold in the consumer packaged goods industry. This diversification helps to mitigate risks and allows the company to cater to a broad range of consumer needs. However, every company has its weaknesses, and Procter and Gamble is no exception. One of the main challenges they face is their high level of debt. With a debt-to-equity ratio of 0.75, the company's financial leverage could be a potential concern, particularly in an uncertain economic climate. Now, let's turn our attention to opportunities. The rise of e-commerce presents a significant opportunity for Procter and Gamble. The company sells its products across various channels, including online platforms, which have seen exponential growth in recent years. With strategic online marketing and sales, Procter and Gamble can further expand its global reach. That said, threats are lurking in the shadows. The company operates in a highly competitive market with players continuously striving to gain the upper hand. Moreover, fluctuations in raw material prices and potential supply chain disruptions can pose threats to the company's operations and profitability. In summary, Procter and Gamble's strengths and opportunities present promising prospects for growth and expansion. However, it's crucial for the company to mitigate its weaknesses and shield itself from potential threats to maintain its market position and drive sustainable growth. The SWOT analysis underlines the strategic positioning and potential of Procter and Gamble in the consumer packaged goods industry. Let's encapsulate what we have discussed. We've taken a compelling journey through the history of Procter and Gamble, a company with a rich legacy and a diverse portfolio of consumer goods. We've analyzed their current financial situation, revealing a strong market presence and robust figures. Diving deeper, we explored their cash flow and balance sheet, both crucial indicators of the company's economic health. Lastly, through our SWOT analysis, we've identified their strengths, weaknesses, opportunities, and threats, providing a comprehensive view of the company's strategic position. Understanding these aspects can help investors make informed decisions about investing in Procter and Gamble.